Hello, everybody, and welcome back to Seamless KSA 2021. Our next session will be a panel discussion exploring revolutionizing payment processes and reaching market maturity, digital currency, uninterrupted payments, and tech embracement. Our moderator for this session will be Mr. David Fuller, Chief Digital Officer at Aquitude. Can I please now invite all of our speakers to turn on their microphones and cameras, and David, I'll hand it over to you. Thank you.
Hi, hi everybody, welcome to this wide-ranging session about payment processes and digital currencies and invisible payments and embracing technology. So we've got a great panel with us to take us through the next 55 minutes or so to cover some of those topics. We've had some really interesting sessions already this morning. Some of this changing technology and the way people approach payments, banking and currencies in the region, especially in the Kingdom of Saudi Arabia. Really interesting stuff. So let's kick this off with a rather general question. I'll go around the panel and get each of your thoughts on what 2021 has shown us, perhaps expectedly or unexpectedly. And what implications that might have for 2022 and the near term for these types of activities. So why don't we start with Prakash, and yeah, tell us your thoughts.
Sure, thanks David. Yes, so 2021 has been an exciting year. So it's been a year of continuation of COVID. We've seen some recovery, and one important takeaway that we can all be pleased with is that many of the user behaviors that were necessitated by COVID, that is going digital, a lot of shopping behavior, the way people consume and research for products had gone digital. We're seeing a sustained we can see a sustaining habit and usage. So digital has really matured, and this is a year where we've got a better sense of how people are building habits. I would probably talk about 5 major trends that we are seeing in 2021 that we expect to further strengthen in 2022. First of all, when people moved to e-commerce because of COVID, interestingly, a lot of that e-commerce has happened on digital devices rather than on your traditional laptops. And what we have seen remarkably is the adoption of payments through the mobile phone is one, but the usage of devices per individual has also increased dramatically. So it's not as if the transactions are typically happening only from one device. We are seeing them using their wearables for in-store payments, using their phones, using their laptops. So now it's a multi-device payment behavior, and we can start seeing early signs of consumers going multi-device for their payment habits. The second thing that's very important that is powering this growth of device-based payments in an e-commerce or online, as well as an in-store method through your wallets like Apple Pay, Samsung Pay, etc., is the emergence and comfort with card-on-file payments that consumers have started developing. So like I mentioned, most of the transactions that we've seen have happened on mobile devices, and it stands also that a predominant share of those payments have happened as card on file. So, consumers are becoming more comfortable, but they are demanding better security. And we do see a maturing of consumer sensibilities when it comes to understanding how their payment might be getting secured. So the overall dialogue in that direction is improving, that we are beginning to see as well. The third out of the 5 trends that I would talk about is security for such digital payments. If these payments are happening through devices, how do we make sure that device-based payments are safe? And Saudi has really led the way for the Middle East Africa region when it comes to device-based payments. Almost half of all payments now in Saudi are happening with some form of a digital device. And what is securing these payments is a network technology called tokenization. And network tokenization has been a bedrock for digital payment security. And This is a technology that powers not only your wallets like Samsung, Apple Pays, and all these other contactless payments you see happening through your phone or your watches, but it is now also extending into securing payments for merchants. So tokenization is an extremely important technology which has now become quite embedded in the Saudi market, but also more largely in the region, which makes it very easy now for us to bring in further digital innovation, whether it's invisible payments, whether it is IoT. Now the bank's technology and the acceptance network and consumer behavior has really matured, and it is backed with good security. The fourth one I would talk about is omni-channel. We are seeing users now, becoming more and more omni-channel users. And if there is one lesson for businesses out of the COVID experience, it is that no business can be a single channel business. So if you're a retailer, you need to be strong on both in-store as well as online. If you are a bank, you need to think about how your consumers will pay despite of any channel that they might use. And this is becoming extremely important. Now, the ones who were hurt the most because of not being omni-channel were small businesses. And now, because omni-channel is going to be the new normal of doing business, there is a very urgent need and also a very promising opportunity to tap in the small businesses segment. So we do see this as something that is growing in 2021, but we expect it to get much more stronger in 2022. And the last one that I will touch on, and which is, I think, quite topical for the Saudi market in particular, is the maturity of banks' technology systems to become more and more API driven. Now, this is again a foundational and a very critical change that is underway. As more and more banks are ready with API driven protocols, some banks are beginning to expose their own sandboxes. This is going to make innovation in payments even faster and better. And this is also quite timely because Saudi is also looking at coming up with its own open banking solution in the market soon, sometime next year. And that is, again, a very promising development that has been initiated in 2021, but we would see the fruits of it starting to come in 2022. So all in all, yes, there's the daily stuff, but some really exciting foundational stuff are also happening. Habit changes are happening in 2021 that is setting us up for a very exciting 2022 in payments.
Great, thanks for that. I'll come back on some of those points because I think we should discuss them later in the session. Farhad, do you want to turn on your mic and give us a point of view from the banking side?
Yeah, thanks, David. Definitely. I mean, in general, like Pankaj said, the pandemic caused like a boost to our digital acceptance. I mean, we see new products and services now offered online. Even the rules from Saudi Central Bank have been a bit altered, allowing us to sell certain products online end to end. The government have initiated many services online that allow us to do full-fledged, even you can do even mortgage and personal finance online end to end with no visit to courts or whatever. So it is getting boosted in all levels. Adding to that, the new regulations coming from central bank for allowing open banking, newcomers coming to the market. So I believe I believe 22 will be very exciting in that space. We'll see open banking in reality. We'll see other non-banks institutions offering services in all level to our customers. So 22 will be very exciting for all of us. Yeah.
Great stuff. Mahavir, do you want to have a go at this one as to what you've seen in the current year and how that'll impact the next year going forward?
Yes. So I basically represent a company called Fathian Technologies, and we are very proud to say that we are one of the only point of sale Android manufacturers which are working on Android 10 and Android 11. For us, the 2021 was a very important year with MADA, especially in Saudi, also doing a lot of upgradations on their side, and also allowing and inviting a lot of new Android players to come in the market to replace the traditional point of sale terminals. we have seen that now the market is ready to accept smart POS, which can do your contactless, your contacts, your QRs and barcodes, and all different technologies of acceptance of payments on a single device. There were times actually before where there were many traditional point of sale terminals from different acquirers on the same desk of one single merchant. So the merchant used to actually invest in a lot of terminals, and then he used to accept the transactions of the payments depending on the advantage of the MDRs he can get from the acquirer. Now with Android coming up and with the acceptance of Android coming in the market of Saudi, I think so a lot of avenues have opened out, because with Android, it is not only the traditional payments, but it is also inventory management. You have your cash register, you have your fiscal modules which can be added, you have your different kind of KYC applications adopted on the Android POS. And with smart cameras now, with Face ID or iris scanning also being possible on the Android smart POS. So yes, we have a very good year in 2021, and we see that 2022 will be a very important year where the percentage of migration from the traditional devices will be more on the Android POS devices. So that is one side of the whole idea. But we have also seen that many of the telecom operators as well as FMCG companies are also looking at automating their order booking and order intake processes by using different terminals of POS, which are absolutely controlled by the terminal management system with geofencing, geolocation, and all the different business operations which can be managed remotely. And this actually gives a lot of advantage for a service provider. With, of course, new PSP licenses opening out, with open banking coming in the market, we see that the adoptions will grow in this market. And we have been very successful in the Middle Eastern market with a couple of countries and working with acquirers. And we are seeing that, with this soft POS also, which is now coming up in the market, the acceptance of smart POS will always be there, because credit cards are not going to be replaced. The cash will be replaced with digital currencies, but you always have credit facility, which is always everyone wants to avail for. So yes, it's been a good year for us altogether.
Great. So some interesting points. The session just before this, I think they're talking a lot about cashless society and some of the pros and cons of that. And maybe we'll touch on that when we come back to talking about invisible payments. Nishant, if you can turn your mic on and give us thoughts from your side of things. What happened this year and what you're expecting for next.
All right. Yeah. Hi. Sure. Thanks, David. Right. So actually, I was, when we attended and when we did this in 2019, wherein, the panel in which I was, we talked about, how do you see yourself spending, a day without carrying your wallet, and, can you really do it? So at that time when I talked about, probably, if I'm going to my office or going to a place where, where I know, okay, these outlets are there and I can go there, have my lunch, book my taxi, probably have a glass of juice outside. So yeah, but I was comfortable in my daily life. I could probably go out and come back without having to carry any cash or any traditional currencies. 2020, I could not be, we could not meet. And now the same question, if you ask me today, the things have completely are completely different, right? So if I have to spend a day today in 2021, move out of my house, spend, go around, eat stuff, buy things, pay for transportation, even if it's it's a local transportation, not a ride share like Uber and Ola. So that has completely changed, right? Now I can, after 2 years, I can say that I can, spend a day totally comfortably. move out of my house, I leave my wallet. If I forget my wallet, I can probably very simply spend my day, at least here in India, with the proliferation which is there, which has happened, in couple of years in terms of digital getting to smallest of the stores, be it a vegetable vendor, and these guys are, I'm not sure if you can connect to, but these guys are really not that tech savvy, or they're not typically rich and that stuff. So as Mahavir was talking about, from more from a Saudi, or the experience where there's a lot of pause, there are 3-4 pauses, and then customers getting confused, or the merchants getting confused. So that is now what you see here is there are like 3-4 QRs which have been deployed, and those guys have been given a UPI is something which has helped. So just to give you a brief, UPI is a unified payment interface, which is kind of a big thing in India now. So just to give you a perspective, it processes roughly around 65% of the total retail payments happening in India. So it's huge now. So all those 3-4, there are like 3-4 different acquirers who would have onboarded that one single merchant, who typically never had a avenue to accept payments using digital, not digital currency, using digital methods, right? So that has completely changed, and and the acceptance, which again, as Mahavir was saying, the pauses have started to change now. You see integrated devices wherein you can have a NFC, you can have a scan and pay based things, accepting payment with RFID based payments, or NFC based payments, which is a contactless card. So that have also started to pick up, especially that all of this has been greatly helped by the regulator, which I think Fahad roughly talked about, wherein as to how the central banks there in Saudi are helping. So similarly, the central bank here in India, which is RBI, which is Reserve Bank of India, they have also helped in terms of increasing the limits. So earlier it used to be 500 rupees, and nobody found any merit. Now it has been revised to 5,000 rupees, which is 10 times the value. So all of a sudden, people are finding a real value in terms of going without card, going NFC or a contactless based payments. So all this have come in. This again kind of links into other thing which again has come in, which is the standing instruction, which is a mandate, wherein you set up a mandate and then then you basically forget about it, right? It's a standing instruction on your payments. So all those limits which were very less, as in something like a 200 rupees was there, if I recall correctly, which really doesn't push me towards making an effort to set it up and and to adopt to it. But with the revision of the limits, with central bank allowing more leeway and giving more freedom to payment service providers, this has started, we have started to pick up the frictionless bit which you talked about or briefly spoke about. Probably we'll come back to it. So that is all coming in now, and and probably we are now looking at the second phase, which which the panel is as the topic of the panel is aptly named, right? So there is enough a basic scan and pay payments, or a basic payment is something which is done to an extent, if you ask me, at least here in India. Going by the size of it, it's very large. Probably I'm talking about a tier 1 or maybe a tier 2 city. But yeah, it's done to a great extent, and now we are looking to go beyond what has happened, wherein I do over the counter payment using a QR or a RFID or an NFC. Now we have to move forward and look if we can actually go frictionless, if we have a voice based thing or a face based thing, which can come in and push us to the next pick. So we'll probably I'll talk about how I look at the customers probably when we come back on to about the customer base.
Yeah, so I think we'll have a look at some of the more disruptive technologies a little later on. But it's interesting that you says that you can leave your house and feel fairly comfortable that you can get through the day. I'm currently in Europe, and I can't. There's no way I get through the day without cash. I know I have one of these very funky, I don't know if my computer will pick it up, very funky ceramic NFT MasterCards, which makes people literally fall off their chair as if it's some sort of voodoo magic. But it's a very cool thing. But even with that, I can't get through the day without cash. There's still a bunch of small businesses, going back to Pakash's point, that still a lot of small businesses that either don't have the capability to process electronic payments. So how do we get to that next part? We've talked on. I talked a little bit about some of the open banking regulations and access to new types of terminals and Android and things like that. What does the next sort of piece of the puzzle need to happen in order to make this happen?
Yeah, it's for me, David.
Yeah, anyone can come in on that one.
So I'm okay. Down the road, like I said, I can see it's 4 elements for the whole ecosystem to mature together. I mean, the regulator in open banking, they issue the rules, the mandate, the dates. So Q2 next year, there is a milestone. End of the year, there's another milestone to achieve. And then we have the banks who are racing in that competition. We have the technology providers offering their services now on the market, and we have the fintechs. We already have Sandbox connected with the central bank, offering the service ready to connect to the banks. So highly expected next year, we will find that up and running, giving the pace that we are all racing on. But again, open banking is a tricky subject. It will be, down to the monetization part and how efficient are these services being offered. So, I do believe it is not that easy. Worldwide, it is not successful everywhere, even if the mandates are, followed. But is it financially beneficial or not for the banks and the fintechs? That's a big question, and many countries didn't succeed in that sense. So the missing piece, I would say, again, is just the right business case, the monetization mindset for such services, and make it effective on the ground.
Interesting point. Prakash, you got any insight on your side of things from that sort of view? If there's any sort of barriers in the way or any challenges?
Fahad makes some excellent points. I'd sort of pick up a few of them and then add a bit of my own. So number one, I do think that the changes that are happening on the fintech side in Saudi is something that everyone in the audience should keep an eye on. Fintechs will definitely bring in a lot more energy, creativity, and it would be up to the partnership with the banking industry and with the stakeholders and enablers like MasterCard to work closely with them to make sure that while we're bringing in this new lease of creativity, we're doing so responsibly in the spirit of what the regulators have in mind. And I think a lot of innovation should be in store now with partnership models coming next year. So I'm imagining new branded products which are powered by a bank coming into market. I'm imagining banks fronting some of these fintech solutions completely as a banking service. These could be in the areas of personal finance management. They could be around buy now, pay later, which I think this is another very interesting development that's happening in the region now. They're saying, why even use a credit instrument if I can do a per transaction credit access? And that's quite interesting, and that's quite fundamental. So we will see more of that, and it's all going to be facilitated by this fintech environment that is emerging in Saudi and the regulator sandbox. With so many, I think almost hundreds of companies now who are in the sandbox and doing some very exciting stuff. So I would be very, very interested and very excited to see how that sort of pans up, but more importantly, also how the ecosystem partners with the fintechs. So that's one. The other very important thing that Fahad talked on, and I'd like to touch on that, is on open banking and more generally the API-based standards-driven ability to access data and facilitate payments. There are lessons to be learned from international markets. They've done some things right, but they have also done things wrong, as Fahad has mentioned. So it is not a copy paste for any market. There is a lot we can learn in terms of improving operational efficiency. Anywhere where open banking was launched, whether it was in India with UPI, as Nishant was talking about it, or in Europe, the operational performance in the initial days had a lot that needed to improve. And that has in turn affected the adoption, the initial adoption. So it went through a slower adoption curve. And when it comes into a new market, there is all reason to think, how can we do that better? And the real way to do it better is to have the right incentive structures in place as well. So the commercial model point and the use cases point, I'm just extending to Fahad's point. He talked about commercial model. I'll also add identification of use cases. So when it comes to that, we need to look at what are the right use cases, what are the commercial models, because if you've got the right incentive, you will focus on operations and delivery. So I think that complement will be extremely important, and it would be very interesting to see how it evolves in the coming year on open banking. So those were the 2 points I wanted to touch on. And from my side, I think the other thing that I would talk about is this introduction of something called as click to pay in the Saudi market this year. Now, if you think about yourself right now, and the audience, can you remember how many places you've kept your card on file? Most people cannot anymore, right? Can you imagine the agony of changing your card and then going one by one to all of those places to change your card details again? It is becoming an increasing nightmare. So it is very important that the card on file management infrastructure is also rethought. And click to pay is an industry standard, just like contactless is today, for the e-commerce world. Now, what happens in click to pay is that instead of storing your cards with each and every merchant, you can now store your card with a central repository, which are the schemes, and you will see a button on the merchant site. And when you click on that button, your card details are automatically fetched and the transaction is done. So you don't need to store your card details with different merchants. Now, that's a very, very important change, because now going in future, if e-commerce is the way that the world is heading to anyways, you want to make sure that those payments are safe. You want to make sure that your success rates are high. So click to pay has come up, and I would be very, very excited to see how click to pay is adopted in Saudi next year. So I would add that as one more point. And then one thing just to keep an eye on is the adoption of digital devices for payments. How frequently do you see plastic versus digital devices? And that's to Mahavir's point. With smarter acceptance, the Android-based POS terminals, I am super excited about that as well, because the kind of integrations that you can do now with the smart POS, with your electronic cash register, with other data systems, it can be a revolution. And if I plug that in with the fintech revolution that's happening, Saudi is well placed to do some really exciting stuff next year.
Did you want to comment on that, Mahavir, in terms of how that's impacting your business?
So, I'm just focusing on Saudi right now. I heard about Nishant, but in fact, we have also created some very unique products for the Indian market, which will be rolling out very soon. Just for the Saudi market, what we are seeing right now with a couple of acquirers and the banks, apart from the normal point of sale terminals, we have seen that because of a lot of fintech coming up, a lot of wallet services are coming up now. These are all closed loop payments again, and the merchant network wants multiple wallets also to be accepted on the payment mechanism. What we see is that maybe, I'm not very confident about it, but I think so the government of Saudi has taken a pretty keen interest on the way UPI has been deployed in India, with unified payments coming up. And I think so one of the next move for the Saudi market would be to come out with a complete unified QR or the unified payment mechanism. That is something which will actually allow a lot of merchants headaches and even interoperability, which will come across when it comes to multiple wallet points. Apart from that, what we are also seeing is that, the commercial part is very important. Every time we have seen the the basic models of acquiring is like there is a cost of the product and we sell the POS, and then there is a transaction charge. There are some of the bigger banks or acquirers which are giving it on leasing part, or probably siphoning off against the transactions targets which have been put across by the merchants. To bring down the merchant cost or the product cost is something which a lot of markets are working on. And that is where the innovations are coming up. So that's where we have seen soft POS coming up. We have seen tap and pay coming up. We have seen sound recognition. We have seen, dynamic QR soundbox coming out, which was very well adopted in India with Paytm. So we as Paytm have really worked very hard in terms of understanding the market. And when we look at Saudi, I think so there will be a time next year where we will see that with QR being encouraged as one of the form factors of payments, Soundbox would be penetrating this market in a big way, where and there can be unified payments also coming up very soon. So these are the two factors which we see would change the landscape of the Saudi market, especially. And we will also see that a lot of acceptance of smart terminals will also come up in those market. That is what we see.
Fantastic. Question from the audience. How can we encourage digital payments in a B2B environment where transaction fees could impact the margins compared to a check or cash payment? Does anyone want to have a go at that one? I guess there's lots of different pain points for different, depending on who you are, whether you're a merchant, whether you're a small business, or whether you're whatever. And a lot of these fintech solutions are trying to get to each one of those, whether it's holding currency in different currencies, whether it's reducing the time in which you get your money, whether it's
I'll just add
foreign exchange rates. There's a whole bunch of different things in there, I guess.
Yeah, I'll add up something on this because this is more on the online payment side of business. But what we are seeing is that I'll just give an example of India. I'm not sure if people are aware of RuPay card, right? And the Bharat QR. So what the regulation did is that the RuPay card or the payment schema, there is no MDR. So there is zero MDR altogether. And there are a lot of benefits which have been given down to the merchants. So the merchants are encouraged to accept the payments, using that particular payment schema. I think so with MDRs lowering out and the volumes increasing on the online payment side, I think so. I personally see that, yes, it is all depending on the volumes of business, and with new technology adoptions coming up, especially on the wallets and the new fintech industry, I think so automatically you will see the price factor absolutely lowering down. That is what my point of view is. Of course, anyone else can put down their point of view. Yeah.
Hi, Nishant here. So, right. So if I remember, or if I get the question correctly, it's more talking about cost of payments which incur to in a B2B payment. So if you look at the market as to how it has come to be, especially in terms of a B2B payment where the businesses are either paying feet on street or paying out to their merchants or paying out to their vendors. So a lot of it is has now been taken up by fintechs, as we've been talking about fintechs quite a bit. So fintechs essentially provide certain quite a lot of value added service in terms of depending upon the plan you are on. So in terms of they help you with in-depth look into your what kind of business you are doing, and what different dashboards which can help you run your business better. And they charge a premium, so there is a cost to every payments which are being made to anywhere. And of course as a point, as a bank, I take the cost and probably mark up it a little bit in terms of covering my cost and covering my technical costs. But as Mahavir was saying, these are very less now. It runs in rupees, not rupees, paise, cents, if you call it, right? So those are very less now. And the markup which is done by fintechs for providing these services on onto a large corporate or some legacy corporates which are there, so they are they are provided lot of incentives to, they are provided lot of insights into their business, lot of tech stuff. When I say tech stuff, lot of insights, different angles, cuts, dashboard, the performance of the APIs, the lean periods of the APIs, high periods of the APIs, latencies, all those kinds of insights, which are typically a large corporate, probably would not do, or even if they want to do, they'd have to, scale up significantly and move organization in that direction. So the costs which are, of course, there are certain costs which are markups. Of course, everybody has to make a business out of it, but the costs which are being levied are amply offset by the insight and by the kind of services which this fintechs bring to the table. Now, second portion, of course, is there when these guys have always been using a B2B, using the channels which are available to the bank. So typically they log into a corporate internet banking, or their respective banks internet banking pages, and they go out and they make their payments. So talking about those kind of payments, making payments from there, so alternatives are always available. So there are channels which are free, right? You go, you prepare a file, then you upload the file, and then the file would be approved by somebody. So that's the traditional model, right? So it's still free. But when we come to a API base, where you want a speed, where you want a quick settlement, where you want an insight, right? So all these probably come with a little bit of cost, not too much, if I'm to say. And those are well offset in terms of the saving they make you operationally in your settlement, in reducing the cost of funds, movement of funds, in terms of saving your resource costs which you have put in. So if you look at the B2B payments, rather than going for a traditional channel and probably paying a little bit extra and adopting to a API based and open API based payments, the benefits are far more. And see, because the market speaks for itself, right? Even if, let's say, there is some cost which is extra in API, the take up is huge, right? Everybody is moving towards that, right? So there has to be a benefit, right? Every business does a cost benefit and then decide to where to go. So the uptake is still high. I'd say the pricing, whichever, let's say there is a little bit of pricing which is there, that's well justified, and that is evident in the market behavior, wherein more and more people are moving towards API banking, or open banking based payments, or API based payments, where it's not, and the markets where it's not, people are moving towards that, as we as all of the respected speakers talked about,
Sure
right?
thing.
So
Yeah,
whoever or not, they're
absolutely.
moving there. So in terms of
So
that,
so
it's very
Farhad,
good.
Farhad, from your point of view, is there pressure from some of these new companies on the more traditional banks in terms of their pricing
Yeah.
structures and what they're offering to businesses?
Okay, honestly, I mean, let's say when there is digital payment pickup in the market in the past 2 years. I mean, we can see the number of transactions done online, the mandate of having point of sale in every store, and all of that. But specifically, I'm talking about the e-commerce side. This led to newcomers coming, companies offering payment service providers as a payment service providers, offering more robust, innovative solutions, the merchant side. I mean, what the merchant is looking for is looking for clarity in his traffic of payments coming to him, as well asking for a clear reconciliation for settlements with other providers. So with all of that, the newcomers are coming with more innovative solutions to them, and we can see the pickup. As banks, honestly, personally, I don't see the banks are so much interested in the service providing of payments field as such. In the end, will benefit. Those accounts will be fed into a bank account at the end of the day with a regular bank. So I do believe the movement of the market is in favor of the ecosystem as a whole, and in that banks still not at threat position. But obviously, we can see new certified payment service providers now coming with the ability to host funds which is a kind of, I would say, competing with the market share of the banks, but it is still not in a threat position. as I can see it, at least for the coming couple of years.
I mean, from a cross-border point of view, I will try and avoid my bank as much as I possibly can, because if I've got ways of avoiding the forex fees and the retail fees that the banks are choosing, then I've got much better options these days. Not necessarily in Saudi, but certainly in the US and other markets. So yeah, it's interesting to see how different players in the market are reacting to the new technology. Let's do a little bit on digital currency, because it was in the advertised program. How do digital currencies fit into this space? What do we need to be looking at from that point of view? Does anyone want to have a go at that? Or is it too early to say? Are we still going to be talking about digital
So yeah,
currencies
maybe I can
time?
take a stab at that. So basically in digital currencies, you've got two very prominent versions coming up. The ones that the governments are actually backing, and they're central bank digital currencies. And the objectives and the purpose of such a currency is markedly different than some of the other digital currencies that have probably taken the popular imagination space, which may be currencies that are not backed by any fundamental asset, or they could also be currencies that are backed by some kind of asset, like a dollar or gold or something in the back, right? So there are within the non-government cryptocurrencies and digital currencies, they are available now. This is an interesting space. It is going to continue to grow, and they are solving different problems. I think we have seen this year across the region. I'll speak for Middle East Africa, and even in fact in other markets, it's common news. Governments are increasingly looking at central bank digital currencies with greater interest. They're looking at this as a way to reduce, paper currency in circulation, and improve people's access to money. Interestingly, there is a curiosity on how can this currency be used on a day-to-day basis, because a currency has to actually serve all the use cases and the purpose that your regular currency does today. So if you can create a currency that can only be exchanged through one mobile app to another mobile app, it's not meeting its true potential and its full purpose. So when it comes to central bank digital currencies, they're looking at ways in which they can actually do more. And one of the interesting areas is that you could use your digital currency even on regular acceptance. So your regular merchant acceptance could be a way for using digital currencies. And we are seeing the emergence of digital currency cards. And MasterCard itself has come up with a digital assets card program, a DAC card program. What it does is that, let's say, if you are holders of a currency that is allowed to be used in your country, and you've got a proper exchange backing it, it will be possible for you to use that currency on a card and pay it at any regular merchant. So you could actually come and make a payment on regular acceptance. The transaction itself will actually happen in the regulated currency, but your store of value could be a digital currency, and there will be exchanges that will manage in a risk-adjusted manner, regulated risk-adjusted manner, to convert that digital currency into a settlement currency and complete the transaction. So we are seeing digital currencies now even going to the next step, where they are a method to not only save and transact and invest, but also to pay. And that interest is coming up, which is very interesting. So we are seeing that space of digital currencies becoming quite active in the card business. And the other area is, we've seen the emergence of card programs where your benefits are actually paid as digital currency points, as digital currency rewards. So we just launched a program with Gemini in the US, and we are seeing a very strong interest in that model as well in the market. So I think this is something that
there must be a massive generational difference in adoption for some of these things, I would imagine. I mean, the level of literacy around digital currency for certain generations is probably vastly different between generations. Would that be fair to say?
It would be interesting. I wouldn't venture a comment yet, but anecdotally, yes, it would probably make sense what you're saying. We do see, experimentation happening with digital currency. Lots of people are doing it. I wouldn't be surprised to see a youth bias, but I wouldn't be surprised to see a lot of, middle-aged people and even higher dabbling with it. So that's a very interesting demographic to probably research a bit more on.
What about smart contracts? Can you see it being used increasingly with smart contracts?
Yes, so venturing away from digital currencies and more towards blockchain, I think smart contracts and the potential to optimize it with blockchain is very high. Some of the places where smart contracts have been managed and administered on blockchain, one of the big questions is who's going to manage that environment, and you do need some environment operator. I think these are questions that are getting answered with new trials. So we will see a lot of maturity of that also coming in the coming years.
Okay, interesting. We've got a little about just under 10 minutes left. I'll open this up to everybody, and you can each have a go at it from your particular point of view. But what's the most sort of disruptive thing you see coming in the next few years, whether it be a technology, a trend, something that might disrupt the payment space significantly? It's been a little bit of a prediction time.
From my side, I see Face ID payments, which has been very successful in China, is now being adopted and under trials in many countries. We see, sound payments also coming up. So I think so these two different payment, style or methods would be coming up in many countries in a couple of years to come.
Sound payments, I need to look into. It reminds me of a scene of a film where they used to record the sound of coins dropping into a phone and then play it back as a way of phishing and getting things.
Nowadays, most of the smartphones also are having a particular sound on authentication. So yes, sound payment is something which is a part of authentication, which is also coming up now very well.
Interesting.
Yeah.
Interesting. So the panel before this about cashless, there was some interesting ideas around that as well. Fahad, any insight into what might disrupt the payment space in the coming times?
Okay, technology is there. I mean, like you said, there are many technologies coming, but it is the matter of how you commercialize it and how you put it in space. I mean, like blockchain and all of that. I don't see it still being. It's for me, it's like a solution looking for a problem. So it is coming, but who knows what are the use cases that they will be used for. The same for fintechs coming now, the regulation allowing them, open banking coming to them. But again, are they going to be successful in competing with banks, yes or no? Well, I don't know, but definitely all of that will disrupt. I have seen some use cases written bank in Europe. I think they have interesting use case of a fintech offering a wearable payment for kids, where the more they do activities for their well-being, they get rewarded, and then they can do their payments through their watches. It's a very interesting use case. But again, how is that going to be picked up? How is that going to be? When we say disruption, it could be up and down. I mean, for all banks, but definitely the disruption happening in all levels, whether inside the society of banks, inside the, I would say the resources moving here and there, the technologies getting introduced, the cyber element out of it. So all these newcomers is disrupting the whole ecosystem. But it is, I think, in the end, it's in the favor of the customer at the end.
Anyone else got any ideas? What about some of these in terms of trust? I mean, it's the banks have the advantage, especially in the region, of having decades of trust built up with their customers. What if a player like an Apple or an Amazon or another massive brand decided to go out and become currency, bank, and everything else?
I believe go ahead.
No, sorry, go ahead.
Okay, from trust level, I don't know if you would trust your money with Facebook anymore, for example, and that's why they got rebranded. So it got ruined here. But
Apple might be able to pull that off.
Exactly, and Google pulled out their plans for having a digital bank. I believe it's not an easy, but again, yes, customers would only trust banks. And trust is not an easy thing to be awarded. So maybe that is one of the challenges that fintechs will face when they try to increase their market share. They will rely on reliable telecom companies. I mean, what we can see here in the Saudi banks and the Saudi market, mostly telecom companies are the ones having a bigger piece of the fintech arena, comparing with non-telecom, for example, because they are trusted and they are already having a space. Have a footprint with the customers.
Prakash, you were saying at the beginning, it's all about partnerships. I guess that's probably where it's at, rather than companies trying to go out and doing it on their own.
Yeah, I would say that partnerships will still be a big role. And to your question on the international digital giants making a foray, I think they've already begun, right? I mean, if you look at it, they came up with their wallets, and the direction of travel has been one of partnership, right? So they have worked with banks and they have worked with schemes, and it has been a win-win. Customers are getting safer and more convenient payments. Banks have definitely seen more customer engagement and migration away from cash. It's been good for the merchants' businesses as well. Payments have become faster and more convenient, better throughput. So it has resulted in win-win outcomes. I would say the big disruption is definitely going to be with the way fintech partnerships evolve. There is a spectacular opportunity. Customers do demand better user experience, and I do believe, and I completely believe that the GCC market has got the foundations in place, the technology foundations for security, making sure that payments are safe, regulatory frameworks. There's been a lot of development there, so I think we've got the bed on which we can lay a very strong foundation. Fintech partnerships are going to be very, very critical because some of them have spectacular ideas and amazing ways to execute. And, they can be a very strong complement to what banks are already doing. So identifying that, I think the big disruption, I won't venture to say what would be those big disruptions. I can, if I would say, let's watch out for things like BNPL, biometric checkouts. So MasterCard also has come up with a biometric checkout payment guideline for facial biometrics as a way to pay. And you will have all of these led by a lot of fintechs and how they partner with banks. So I would say the disruption is actually going to lie in how the partnerships work out and how effective they are.
Great. So I think I need to wrap it up there. It's been a great session. 55 minutes has flown past. So thank you very much to my panel for all your insight into this space, and never know, let's go and check up on our predictions this time next year. Thanks all.
Thank you, David. Thank you, everyone.
Bye-bye.
Thank you. Thank you so much.
Thank you very much to our speakers, and thank you very much to our moderator, David, for leading us in the discussion today. To our audience members, please head over to the next session, which will begin in under 5 minutes. We will see you there. Bye-bye.